Good afternoon, good morning. Welcome everyone to our webinar on Africa tax measures as a result of COVID-19. My name is Kenny Hawsey and I'm the Global Energy Utilities and Resources Tax Leader for PwC based in Johannesburg, and I'll be moderating the webinar this afternoon. First and foremost, I hope that each of you and your families are safe and healthy. I know these are all uncharted waters and very unprecedented times for all of us to deal with. Let me start with a few administrative matters, then I'll give a brief intro, and then we'll dive into the content. First of all, on the administrative matters, please note that the webinar is being recorded and we will share a link afterwards. You can always ask questions throughout the chat, throughout the webinar using the Q&A button in the bottom right-hand corner. We will try to answer as many questions as possible in the Q&A session at the end. But any questions we do not get to address, we will certainly respond back to you directly. So can we go on to the next slide? In the energy sector, energy utilities and mining, we've had what I would call the perfect or maybe unperfect storm. We certainly had the COVID-19 impact, which has certainly had a significant impact on how we operate. And at the same time, we had a significant downturn in commodity prices. Certainly there's going to be a significant short-term effect on the decrease in demand and a potential medium and long-term impact, and we'll have to determine what does the new normal look when we come out of the global pandemic. As many of you, PwC's offices globally are working remotely. However, we've been pretty successful in operating remotely and are still here to serve our clients on a daily basis. I do know that sometimes in Africa, this becomes a little bit more challenging working remotely due to IT, internet infrastructure. But to date, I think we've been pretty successful in managing through that. I think one challenge we do deal with is many governments aren't as connected remotely in its ability to take things electronically as maybe the rest of the world. But I do think those will continue to improve. We go on to the next slide. What I wanted to do is to start off with kind of what we have seen globally in the energy, utilities, and mining sector as sort of key issues that clients have been facing. And I bucket those into three main groups, and that is around people, trade, and tax. And I'll talk a little bit about some of those and some of the things that we have done to support our clients through these. Obviously, from a people perspective, we have had an unexpected movement of people, which has created a number of immigration issues and a number of employment law-related matters around sick pay, communication, remuneration, redundancy, and the like. Certainly created a number of personal income tax and Social Security issues for everyone. And then the thing that not everybody has thought about maybe is a permanent establishment issue by moving people to different locations in unexpected places. It also has put our tax departments in many instances where they were already stretched for resources into an even more stretched environment to try to meet the obligations for compliance, payments, and certainly to deal with tax disputes. So I think in many instances it's put tax functions in difficult positions to try to meet these obligations. And I think it's brought up a need to try to leverage technology more, especially with people working as remotely as they are. When I think about trade, we've also had a large number of unexpected and quick movements of goods and equipment. Many companies have reduced their CapEx spend due to the depressed commodity prices and significant cost cutting in other areas by service providers and the like due to the low commodity prices as well. I think many people are focused on business continuity planning for all business and support functions. And I think from a trade perspective, we've been focusing a lot on customs duties. Are there provisions in place due to COVID-19 to defer or eliminate those? Ensuring we're complying with all customs compliance requirements. Everyone is certainly looking at their overall supply chain and how has this pandemic impacted the supply chain, and how do we quickly pivot when we think about our supply chain and need to move goods around. Another thing I think about when we think about continuity planning and trade is cash. How do we move cash around in the most efficient manner to meet the needs of the business? Now I want to get down to what we all deal with on a daily basis, tax. We're going to go through a number of measures that have been introduced across Africa when we get to the country sections. But some just key themes that we've seen is tax compliance obligations. How are we meeting those obligations, whether they've been deferred or whether they haven't? Do we need to consider any co-sourcing, outsourcing type arrangements? And also, how do we best leverage technology to get our returns filed timely? Transfer pricing. Transfer pricing is certainly an area that we all continue to focus on around the globe. But in this situation, we've had many assets, technology, and people that have moved, which may impact cross-border charges. And unfortunately, we've had the obvious decline in margins, which will certainly impact recharges as we think about cross-border implications. So I think everybody is really focused on taking a hard look at transfer pricing, not necessarily something that has to be landed today, but certainly by the end of the year, people will need to think about their transfer pricing documentation and their strategies, and are they consistent with the business? Another thing that I think everybody is really focused on is the global structure, and in this instance, our African structure. Do we have the overall most effective operating model for where we are today? And looking at global footprints, and we may come back to this in some of the presentations, but this may be an opportunity to really think about your legal entities, simplification, and streamlining. Obviously, many companies put tax planning in place before a year begins, and I think due to the uncertainty we're in, everybody should probably step back and revisit what they put in place for 2020 to make sure that under the current circumstances, all of those still make sense. Obviously, everyone is focused on managing cash. So anything that your companies can do to review tax payments, to limit tax payments, to claim refunds is top of mind for everyone. And I'm sure that some of that will be addressed in the different country discussions. Tax disputes, I think, is another area that we've really got to think about. How do we manage through tax disputes in more of a virtual environment, which I know is not normal for people. I would also tell you my view is in many of these countries, because they are so reliant across Africa on revenue from oil and gas, that I think the tax authorities will be just as aggressive as we come out of this, and then making sure that we can manage through those, particularly as we are on a remote basis. Two other things I'll talk about, and then we'll talk about relief for a quick second. Indirect tax. I know this is probably a time when people are working remotely and maybe focusing on automation, but also an opportunity many times in indirect tax to go after refunds. And I think that's an area where many people are focusing a lot of effort. And the obvious thing that will start to come out of this is transactions. There will be, I think, a number of different types of transactions, whether it's divestitures, acquisitions, mergers, various types of restructuring. And I think we need to ensure as tax people that we are connected to our business people to understand what will be happening from a transaction standpoint and ensure that we are properly positioned from a tax perspective. And when we think about tax accounting, I think everyone will be focused on the valuations around deferred tax assets for financial reporting and working with their accounting and finance teams to ensure that we are focused on what is the right value as it relates to those DTAs. Obviously, we're going to start to talk about this in just a moment, but there's going to be lots of reliefs and incentives that governments will put in place. And we have a global document at PwC where we've been tracking those by country, by type of tax, which we will send a link to everyone with that document. But we'll obviously focus on the specific countries in Africa in just a moment. One other thing I did want to bring to your attention, if you haven't seen it, is the ATAF document around suggested measures that tax authorities should consider as we go through this pandemic. There are lots of interesting things. These are obviously suggestions and are not requirements. but things that I think ATAF is asking tax authorities to look at. And a lot of this is around digital filings. Do we have ability to file digitally, extending deadlines, coming up with flexible payment arrangements, suspension of penalties and interest, looking at expedited tax refunds. So all of these are things, again, I think worth a read through what ATAF has suggested, albeit they're not necessarily going to be implemented in every country. So now I think what we need to do is jump into the discussion of the different items that have been put in place by the different territories around Africa. So we're going to start in West Africa with Nigeria. So Asiri, I'll turn it over to you for an introduction and to give us a brief overview of Nigeria.
Thank you, Kenny. So this is Asiri, partner with PwC Nigeria, and I'll be running through the updates in Nigeria in about 5 minutes. Next slide, please. And just before I go into this, there's a trend we're seeing, and I think Kenny has alluded to that in the intro. But I think the most important thing to take out of it is surely this is an economic crisis of unprecedented scale, not one that a lot of countries have been built to address. And so we probably aren't seeing a lot of proactive measures. Given the state of our fiscal policy as well in Nigeria, there's a lot to be had in terms of the response that we expect. So we still think that there's still going to be a lot more reactions than what we've put here, and this is one space definitely to watch. The key things that we've seen and trends is around extensions, and Nigeria has responded by extending the filing dates for a number of tax returns. Because we have tax authorities across the state as well, this is another area that requires a lot more attention. And so we've only had 2 states, as an example, that have extended filing returns for individuals, which is Lagos and Abuja. Whilst across the federal government by the FIRS, we've seen an extension of filing of returns for corporate taxes by 1 month and transaction taxes moved by a few days so that you're filing on the last day of the month as opposed to 21st. And just very recently, just to buttress the fact that this is a moving target, is tax arrears. Very recently, the FIRS chairman has announced a waiver of penalties where audit adjustments are paid before the 31st of May 2020. I think this is a subtle way of encouraging taxpayers to pay up liabilities more than ever. The next big trend we're seeing is around audits, and this is really a direct response to the social distancing requirement that has been pushed out by the government. Field audits have been suspended, but in terms of audits that are still outstanding, remote platforms will now be used to address those. Email addresses have been proactively provided, and we're actually seeing some of those work. I think the one big thing that will be what we expect the tax authorities to respond accurately to will be when we come out of COVID, how would we then address field audits? Would there be social distancing still in offices, and will we be shouting across to one another just to address issues? That then results in a confidentiality matter, and I think something that the tax authorities still need to address. And then just right down at the bottom, we've also spoken to TCCs and how those will be collected on those electronic platforms, and payment of tax liabilities, which do not have to be in dollars anymore or can now be done in Naira. On the next slide, we have summarized what we see around the economic stimulus bill, which is a big response that we expect from government, as we've seen in other jurisdictions. As an example, we saw that the UK had responded with about 15% of their GDP, but Nigeria is still a lot more to expect. One of the key themes we see coming out from the stimulus bill, which is still not enacted, is a provision for a reduction in payee taxes. So to the extent that you keep your employees till December 2020, there's a proposed credit at 50% of the annual payee that has been remitted. Unfortunately, this does not include petroleum employers, which then sounds strange as this is one of the biggest hit industries by the pandemic. The other incentive that we're seeing is being proposed is a waiver of import duties on medical equipment and PPEs and an introduction of new moratorium. So this is still a bill. There are other provisions that have been introduced. This is still a bill, and I think this is the good time for taxpayers to begin to propose amendments or lobby for changes that they want to see. Over and above all of this, I think there are 6 key themes that we're seeing here. Lack of income tax measures for upstream oil and gas companies, so a lot more activity needed from taxpayers in that space. A need for there to be balance between the revenue and tax palliatives by the federal government, definitely. And then tax strategy, definitely an area for taxpayers to pay attention to, perhaps looking at whether or not you do need, the global footprint that you have, and looking at reducing, the footprint in certain jurisdictions, or just basically looking at how we're structured to address remote working, amongst other things. Effectiveness of technology platforms will continue to be something of concern. Whilst companies may have addressed that very quickly and leapfrogged in that space, we don't know the same for the tax authorities, but there's been some improvements, and we hope that those improvements will match what we see with taxpayers. But there will be some delays notwithstanding. There's been some lack of clarity still across certain measures, and I think the final thing would be that the fiscal environment definitely is dynamic. We do need to stay informed as taxpayers. The measures that have been proposed so far will continue to change and will be updated. This is not something we expected, and so the response we would be seeing from the authorities definitely are likely to change. So I'll hand over now to my colleague from Ghana to share or discuss issues from Ghana. Thank you. Abeku.
All right, Esiri, thank you very much. And in the case of Ghana, so if you can go to the next slide. So far, government or the Ghana Revenue Authority has announced what I choose to classify into 4 key tax measures. The first being around submission of annual returns. And in this particular space, we are looking at the return that is submitted to give an indication to the tax authorities on the amount of tax to be expected during the year, and what is also filed at the close of the year. Now, in Ghana, typically, companies that have December year ends are required to file their estimated returns by March, and a month grace period was given to enable businesses file by the end of April. But for the final return that ought to be submitted after the close of the year, for companies, that was 4 months after the end of their financial year. The Ghana Revenue Authority has extended that by 2 months. So the new deadline for businesses that have a December year end would now be in June. And based on confirmations that we have received from the Ghana Revenue Authority, businesses are not required to file any separate request to get that. So this request or this approval or this incentive is automatic. The next thing that I would want to talk about is what we have decided to call tax adjustment. And here, 2 key things that the Ghana Revenue Authority has outlined are: 1, if you have any debt owed to the Ghana Revenue Authority and the debt is settled by the end of June 2020, penalties that should have applied on the principal debt would be cancelled. And then secondly, because of the issues around the lockdown that we experienced a couple of weeks ago, the Ghana Revenue Authority now changed its ways of doing things and allowed returns and other documents to be filed by emails. So now the Ghana Revenue Authority accepts you filing returns and other documents by sending emails to some dedicated email addresses, and also payment of taxes, which used to be either by going directly to the Ghana Revenue Authority and submitting checks. They have also provided account details that SWIFT transfers can be used to make those payments. The third thing that has been done is to encourage individuals and businesses and corporate bodies to donate towards government effort in fighting the COVID-19. So in that respect, any donation that is made to COVID-19 fight would be treated as an allowable deduction for income tax purposes. And then secondly, if you were required to account or self-charge VAT, that would no longer apply on goods that are donated in supply or in support of the COVID-19 fight. And then finally, for individuals, and of course this may be helpful for your employees, is that now if you have health workers, government, and actually today Parliament is discussing it, that a 3-month employment tax exemption will be granted. And then in addition, if any employee has lost his or her job and as such needs to withdraw from a provident fund, even though that provident fund should have attracted a 15% tax, that would also be exempted. So these are the 4 critical measures that have so far been introduced. And as I said, Parliament is also discussing additional measures to be passed into law. So in terms of key takeaway messages, the first thing that we would want to share is around the fact that, yes, the Revenue Authority, in this case, the Ghana Revenue Authority, has outlined what the measures are, but in our view, there are some questions that ought to be answered to bring a bit of clarity. So, for example, if you're talking about we settling all debts, does that debt also apply to outstanding payments that have arisen from audits? We do not know yet, and they are yet to confirm that to us. Secondly, another key takeaway message now is that the Ghana Revenue Authority is recognizing the fact that businesses cannot be done as it ought or as it used to be done in the past. So now they are aggressively looking at developing and improving their online presence in order to help tax administration to be done online. During this period, for instance, I've had to have conversations with the Ghana Revenue Authority to discuss certain running audit issues. And these were things that in the past they would not actually have agreed to. The next thing that probably I would mention, in addition to the fact that Parliament is looking at other stimulus measures, is the fact that in Ghana, traditionally we have a mid-year review. And during the mid-year review, certain fiscal measures are also introduced. So businesses could also look at having a look at both the COVID-19 and then also taking advantage of the upcoming fiscal review to make certain policy proposals for consideration to government. But in all this thing, what we would want to leave as the final point here is that around this time, when donations and things are being done, there is a likelihood that certain things may be missed. So please, audits would usually take place about 2 to 3 years after the event have occurred. And it may be a bit more difficult explaining issues at that particular point in time. So I would urge you to ensure that whatever donations, whatever negotiations that you are having with the revenue, you keep in place the adequate records. So at this stage, I'll hand over to my colleagues who will take over Francophone Africa. Emmanuel and Jose, over to you. Thank you very much.
Thanks, Abeku, and good morning, good afternoon, everyone. My name is Gilles de Vignemont. I'm a tax partner. I'm now based in the United States, in New York, where I'm heading the African tax group. And before that, I was with PwC in Africa, in the countries which I will be covering now: Chad, Gabon, and Equatorial Guinea. So I'll start with Chad, and in Chad we have a circular and an arrêté, both dated April 2020, that have introduced a 50% reduction on the business license tax, which we call the patente en français, and the flat tax contribution, which is the impôt synthétique général libératoire for the 2020 fiscal year. In Chad as well, there's been a suspension of all tax and custom audits, including what we call general and spot audits, for at least 3 months, with the exceptions of audit which had already started before the COVID-19 crisis, and what we call the desk audit as well. So the audits which are started are basically the audits where a notice of reassessment has been released, or where a final meeting has been held with the tax authorities before, once again, April 2020. One of the questions we have on Chad, what will be the impact, in fact, of this suspension on penalties, and whether or not interest and penalties will still run during the 3 months suspension period. And PwC Chad is likely going to introduce a ruling request to get an answer to that question. And then also in Chad, the circular was very clear that the tax authorities will review the requests made by the taxpayers, which are facing financial difficulties resulting from the COVID-19 measures. And the tax authorities will likely grant deadlines in terms of filing requests for waiver of interest and penalties. And finally, in Chad, a number of relevant food and medical products, which are required for COVID-19 fights, are also being exempt from import duties and VAT also on importation. Finally, on Chad, a finance law is expected in the coming weeks to probably include all the COVID-19 measures and hopefully introduce other favorable measures, such as maybe extending the tax limitation on donation made by company. As of today, the cap is 0.5% of gross income, and there are some hopes that this cap will be increased. Moving to Gabon, in Gabon, there was a letter from the head of the tax authorities dated April 2, 2020, which basically grants the same benefit as in Chad, meaning 50% reduction of the business license tax, 50% reduction of the impôt synthétique as well, the synthetic tax. There are some uncertainties in Gabon on whether or not it's just a suspension or reduction, and whether or not full liability will be done later on. In terms of filing in Gabon, the filing deadline for the DAS return, which is basically amounts paid to employees and service provider, the TP documentation and the corporate income tax return, has been pushed back from April 30th to July 31, 2020. And finally, in Gabon, taxpayers are being offered the option to pay the 3 corporate income tax installments into 3 equally monthly installments in April, in May, and in June. Moving to Equatorial Guinea. In Equatorial Guinea, we have, as of today, we have a decree dated March 31st, 2020, which is granting, in fact, reporting and payment extension, but only to, and that was kind of a surprise for Equatorial Guinea, these measures are only available for non-oil and gas small and medium businesses. So it's a reporting extension of the minimum income tax to June the 30th, the corporate income tax return to July 31st. There's also a payment deferral for the minimum income tax to, like I said, June 30th, together with the reduction of the rate from 3% to 1.5% until September 2020. For the oil and gas industry, there is a plan, in fact, for the Ministry of Mine and Hydrocarbons to waive part of the regulatory fees, but as of today, this decision has not been confirmed yet and has not been introduced into law. Finally, for Equatorial Guinea, a 100% exemption from Social Security contribution until the end of September 2020 for companies which have increased, in fact, headcounts in connection with the COVID-19 crisis. Emmanuel, back to you.
Thank you, Gilles. Hello, everyone. This is Emmanuel Lebras. I'm a Francophone energy leader based in Pointe-Noire and sole taxpayer based in Pointe-Noire. So to start with Mauritania, measures taken by government are very limited, and they have been in fact reserved either for specific products or for some categories of taxpayers. There have been 3 key initiatives taken. The first one, to reduce the price of basic products. The government has taken measures to ease the supply of goods, and this includes taxes and custom duties exemptions, especially on wheat, oils, powdered milk, vegetables, and fruits. Secondly, 2 months municipality taxes relief have been given for 2 categories of taxpayers: self-employed individuals and small businesses. And the third one, which regards the head of families engaged in traditional fishing activities, they have been given taxes and fees exemption for the rest of the tax year. As I mentioned in introduction, these initiatives are very limited. We do not know if additional initiatives in taxation area will be taken, but we will keep you apprised of the events as they unfold in our next publication. In Senegal, on March 23rd, the President has taken some measures designed to contribute to social and economic stability in the country. Mainly 2 areas have been focused: a suspension of tax payment and a reduction of tax payments. But it is worth noting that these measures are to be supplemented by ministerial orders to be implemented. So the first one covers suspension of collection of direct and indirect tax debt for the taxpayer most affected by COVID-19 during the pandemic period. I mentioned an order with who is eligible for this suspension. The second measure consists in a partial reduction of the tax debt recorded in the books at the end of the year 2019 in a total amount of 200 billion from CFA. In terms of a donation, a full tax deduction of donation made to the public treasury to address the COVID-19 pandemic has been confirmed as well. Government has also made an effort with regard to VAT with 2 specific measures. The first one, which is important, they have made a commitment to refund the VAT credits as soon as possible. And secondly, for the taxpayer who are licensed under the investment code, they have been given an extension from 12 to 24 months for the payment of suspended VAT. The authorities in Senegal have also addressed the situation of small and medium-sized enterprise and specific taxpayers, especially those engaged in the sector of tourism, hotels, catering, transportation, etc. And they have been given a deferral of direct and indirect tax payment till July 20. Finally, the authorities have allocated a subsidy equivalent to the amount of payroll taxes due from March 20 until the end of the pandemic to the taxpayer whose activities are directly affected by COVID-19. This category of taxpayer has to be defined in ministerial orders. In the Republic of Congo, the Minister of Finance in a circular dated April 15 has disclosed the decision taken in a taxation area. They cover 3 main issues: extension of tax filing, extension of tax payment, and suspension of tax audit. First, an extension to August 25 has been given for the filing of the annual tax return due on May 20th. This also applies for payment of the balance of the corporate income tax, which is now due on August 25, or wherever the taxpayer has the possibility to agree a monthly schedule till the end of the year for the payment of the balance of corporate income tax. Taxpayers have also been given an extension to 20 of June for the filing of the tax returns that were due during the first quarter. In addition, a 1-month deadline extension for the filing of monthly direct tax returns during the confinement period until further notice has been confirmed. With regard to the single tax on salaries, an extension of payment has been given till June 30, and this measure can be renewed where necessary. It has also decided the suspension of penalties, fines, and late payment interest for a renewal period of 2 months. And finally, all tax audits, both desk audit and field audit, have been suspended for a period of 3 months. Deadlines to respond to the tax assessment and statutory limitation period are extended accordingly. Madagascar. Madagascar is probably one of the first countries that has reacted in Francophone Africa. Was the same for Senegal. And various extensions of tax filing and tax payment have been implemented, and they are summarized in different documents. Since the very beginning of the pandemic period, the authorities have encouraged the taxpayer to use e-filing and mobile platforms. In terms of initiative and measure, we can list the full tax deduction of donation made to address COVID-19. Here again, a suspension of penalties on late payments, but limited to VAT and salaries taxes. They have also addressed the concerns of specific sectors like tourism and also taxpayer based in industrial free zone, which have been given an extension to June 30 for the filing of the income tax return and for the payment of the associated tax. These taxes were due on March 23rd. There are also a suspension of every 2 months on CIT payments. Some initiatives have been made also in favor of exporters and large investors, especially with regard to the VAT regime, because their application for VAT credit refunds have not to be done by the 10th of the month following the end of the partial lockdown. And these applicants for VAT credits are also invited to liaise with the tax authorities. Since early April, the tax office is open in the morning for half a day. With regard to tax audit, we have the same initiative as in Congo, but tax audit has been suspended till May only. This covers both desk audit and field audit. Same has been implemented for the issuance of the third parties notice. With regard to the reporting on payments made to third parties in prior year, the deadline has been extended from March 30 to May 15. And finally, with regard to the synthetic tax, the filing and the payment have been extended from March 15 to May 15. I now hand over to Gilles for the conclusion on Francophone Africa.
Thank you, Emmanuel. And the two first points, like compliance issues, payment and filing, and uncertainty around automatic extension and deferral versus approval required, are connected. So in terms of extension of deadline, there are a lot of unanswered questions, such as, for example, what do we do for countries where we're supposed to file online and where the IT system has not been updated yet? So that's one of the big questions we have. Also, in terms of impact of the suspension of audits during 2 to 3 months, depending on the period. Like I said, what is the impact on interest and penalties? Looks like for Congo, the answer has been addressed, but for many of the countries, that question remains unaddressed so far. In terms of efficiency of dealing with the tax administration during this period, I mean, obviously it's on a country-by-country basis. I understand, for example, that in Equatorial Guinea, the tax authorities are still working and are flexible for taxpayers, at least for what we call, easy demands. If it's just a reporting requirement and you want to file with a few weeks or few months of delay, it should be acceptable. The demand will probably be reviewed more carefully if it relates to payments. And one of the questions that arise during this period as well is, should clients take the opportunity maybe to finalize tax audit, finalize entity simplification, and hopefully, get a better result in terms of interest and penalties during this period. The last point for Francophone Africa is the adequacy of the measures to meet the needs of the low-income and vulnerable classes. We have seen that a few of the countries have introduced like 50% reduction of the synthetic tax. The question is whether or not, these measures will be sufficient to address the needs of the vulnerable classes. Thanks, and I think moving to Osborne for the East Market area.
Hey, Osborne, before you jump in, this is Kenny. Just to all the participants, just a reminder that please submit Q&A. There's a link in the bottom right-hand corner, Q&A, because we do have a time allotted at the end to answer any questions. So Osborne, on to you now to talk about East Africa.
Thanks, Kenny and Gilles. So moving on to the East Coast, I have two countries to cover. My name is Osborne Onyoike. I'm based in PwC, Kenya, and I'll do Kenya and Uganda for purposes of this presentation. Looking at Kenya, the key areas that the government has taken a bold action is with regard to reduction of tax rates. The VAT rate falling from 16 to 14, and the pay-as-you-earn, or the tax that is paid by employees, being reduced from 30% to 25%. If you look at those two actions of the government is trying to put money in the pockets of the employees and also the consumers by trying to increase their disposable income, which is a good move, but I don't know whether the impact will be sufficient, because the question that we have is that if you reduce pay-as-you-earn from 30 to 25%, and yet people are being put on unpaid leave, or the possibility of unpaid leave, or even losing jobs, how effective is that? But it is a move, and a bold move, as it were. In fact, I did a presentation and I entitled it "Dancing in the Rain." So the government is dancing in the rain with all this COVID-19, but it's a good move all the same. The government also promised to pay VAT refunds. This promise has been going on for some time, but now the president put aside a specific amount, 10 billion shillings, to pay pay-as-you-earn VAT refunds, which is a good thing. For the small and medium scale industries, businesses, their turnover tax, which is a tax on their turnover, was reduced from 3% to 1%. This is a way to support the small and medium-sized enterprises, or even the smaller ones. So you can see those are bold moves to try and recognize the impact of COVID. But having said that, the government has expenditures which are peculiar or as a result of COVID, and you'd wonder how they're going to finance that now that they've even reduced the tax rates. The government then introduced a raft of measures, which, if you look at carefully, would result in actually increase in tax revenue, which they were not having before. So a lot of tax exemptions were removed. Capital allowances, the way they are computed, were overhauled, and they said it's simplification, but in our view, it's not simplification. They've just brought forward your tax payments by changing the capital allowances schedule. They've imposed VAT on transfer of business as a going concern. Obviously, that will have a significant cash flow impact, especially where the person who is receiving the input VAT, if the person has not begun business, you'll find to recover that input VAT will take a long time. But the government will be happy with the VAT that it will receive as output VAT. The government also did some interesting moves in an effort to reduce the VAT. That is, it creates VAT refunds. And as you know, VAT refunds are created by zero rating of items. The government removed items from zero rating to VAT on exemption. So that will reduce the impact on government to pay refunds, but at the same time will increase the cost of goods because, as you know, VAT exemption actually increases the cost to the end consumer. There are also other changes, introduction of VAT on various other services, which there are publications to deal with that. So you can see on one side, the government has given and it has also taken away. Whether there is a balance between the two, we'll come to that. But on the running theme that Kenny and the rest and my fellow colleagues have talked about, use of email, video conferencing has scored big time with the tax authorities. We are doing alternative dispute resolutions on email. We're doing them on phone, filing documents. You moved faster than I thought, Abraham. Will you go back? We find that tax payments have been no changes in filing deadlines. Filing deadlines have kept the same. Payment deadlines have not changed on the basis that you can do all that on iTax, which is the portal. So that has not changed. In terms of oil and gas, no change in upstream oil and gas, but there was a change on the midstream because on the capital allowances schedule. So that's really on one page on what's happening on Kenya. Let's go to you. Let's cross the border to Uganda. Now we can move to Uganda, Abraham. So Uganda, the moves have been administrative, have not been legislated. So the things that you see there in terms of the changes have been administrative. The tax authorities have said they can only do administrative things because any changes in law require the parliament to pass them, and they have yet to get the authority to pass, to implement anything. So what you see there, the Uganda Revenue Authority announced some changes in terms of filing deadlines, which is a good thing. But the essential part is that the payment deadline did not change, but the filing deadline changed. So that's an interesting way of doing it. Taxpayers who had an MOU, which is like a payment schedule, agreed with the tax authorities, were allowed to negotiate with the government just in case you need an adjustment, but that was only given for a short period of time. The rest of it is extensions of deadlines for filing of tax returns. The other thing I'd like to raise on Uganda is obviously the use of emails. That has gone up quite a bit. People working from home have been given email addresses to file documents. Tax audits have not stopped. The tax authorities have said if the audits can be done online or through the phone, those should continue. But because the revenue have less staff, because many people are working from home, what we're noticing in Uganda is that they're focusing on the tax audits that might result in big revenue to them. So those audits is a bit more vigor on them because there's something expected at the end of the day. So the last one was on voluntary disclosure. So if you do a voluntary disclosure, the promise, and they say it's a firm promise, if you do a voluntary disclosure, pay the principal tax. there is now a complete waiver of penalties and interest. So that is a significant promise by the government. So let me leave you with 3 key messages from the East Coast. Tax revenues will go down because of economic activities. I think that is right across. But I think it's important to know that in the East Coast, the economies are mixed or hybrid. They're not dependent on a resource. So the impact on prices of resources is not as much because the economy is a bit of a hybrid or a mixed economy. But still, tax revenues will go down. The other second message is that the investment tax authorities have done on technology has come in handy in terms of filing, e-filing, e-payments, and that is, it's really positive on that. But the elephant in the room is what does the government do about the informal sector? Because there's a lot done on employees. But what happens to the informal sector, which employs a lot of people? What happens to specific industries like tourism, which have actually ground to a halt in Kenya, Uganda, and many other countries that rely on tourism? So tax cannot do that alone, and we look forward to the government doing specific financial support to those sectors. So that, in a nutshell, is Kenya and Uganda. So I'll now hand over to Christina to look at Angola. Thank you.
Hi, everyone. Good afternoon. So my name is Christina Teixeira. I'm a tax partner for PwC Angola. So we would like to give you an overview of what is currently happening in Angola. So as an initial remark, the President of Angola declared the state of emergency starting on the 27th of March for a period of 15 days, which was already renewed twice for equal periods. So with the initial declaration, several measures of different nature have been introduced. However, from a tax perspective, there were not many tax measures taken by the government in this first state of emergency declaration. So in practice, the law just refers as a general note that the payment of taxes on import of foods, medicines, and other essential goods will be regularized later, and the Ministry of Finance would be the entity responsible for ensuring the mechanisms for this measure to be implemented. So no further guidance was provided at that time. So the law also referred the counting of the deadlines of any statute of limitation and expire for legal actions and rights during the validity of the state of emergency have been suspended. And finally, in the initial declaration, the tax authorities have issued a ruling order where they established that the import of goods for the prevention and containment of COVID-19 were exempt from the payment of custom duties, VAT, and other fees due for the services. This exemption were exclusively for the importation of those goods for humanitarian assistance and donations, so no further use should be given to those goods. The ruling order also states that these imported goods, as well as those produced in Angola, donated for the prevention and containment of COVID-19, will be considered as deductible costs for corporate income tax purposes. For those purposes, the donors should make the register the nature and the quantity of goods donated, as well as indicated its beneficiary. So in order to control such measures, the tax authorities have mentioned that they will make an inspection post-custom clearance to the entities that will benefit from this deduction. So as you can see, these initial measures regarding the state of emergency were limited, and only when the state of emergency was renewed, additional tax measures were introduced. Nevertheless, it's worth mentioning that the tax measures that were presented are still immaterial, and when compared with the measures that have been adopted by other countries and represent a tax relief with little significant impact on the company's treasury. So that being said, the most relevant measures that were applicable by the government of Angola, it's related with the corporate income tax return filing, which were extended. So for companies that were included in Group P, which often filed a tax return by the 30th of April, there was an extension up to the 19th of May. and for companies included in Group A, the deadline has been extended from 31st of May to 30th of June. So therefore, in a view of exceptional situation in which we find ourselves, the filing of declarations for both groups have been postponed for just 1 month when compared to what is provided in the corporate income tax code. In what relates with the Social Security itself, there were implemented 2 specific measures. One related with the contribution made by the employer and another one related with the contribution by the employee. So in what relates to the contribution by the employer, there was a deadline for the payment of those contributions. So the payments that are due in April, May, and June 2020 has been postponed. So employers have now the ability to pay these contributions related with those months between July and December, and they can pay in 6 equal installments with no interest on late payment. In what relates to the employees, the Social Security contribution amount, which corresponds to 3%, that is due for April, May, and June, it is authorized to be transferred to the employees itself. So this means, therefore, that the 3% that is normally deducted from the employee's remuneration and delivered to the Social Security can be paid to the employees. So this measure raised some questions from a practical point of view, namely within the scope of Social Security online services. However, up to date, we have not yet received information and instructions how this will be done from a practical point of view. So we're still waiting a clarification from the tax authorities on this point. And considering that the deadline for submitting the Social Security contributions is the 10th of May, so we're running a little bit of time to see whether or not the Social Security will mention anything related to that. On another measure that was released by the government is related with VAT. So companies are expected to be granted 12-month tax credit on the value of VAT incurred on the import of capital goods, of raw materials that are used for the local production goods from the basic baskets and other priority goods which are listed in the law. So AGT has recently clarified through a ruling order that in fact this is not a specific credit, but instead is a deferral by 12 months on the VAT that should be paid on the importation of such goods. Finally, there are also additional measures that were not officially expressed in the Angolan official gazette, but we believe that it's still worth noting them in this forum in the scope of the actions aimed to mitigate the impact of this pandemic. So one of the measures was related with the payment of real estate income tax, which payment can be made in 4 installments in April, June, August, and October. So the payment of the 4 installments, actually, it's not new. In practice, was already possible through a letter requesting the payment in installments to be filed in order to allow these 4 installments payments. However, in recent contacts with the tax authorities, what they referred in relation to this is that no letter would be required in order to make the 4 installments payments. In addition, the tax authorities also are recommending, and similar to other countries, that the taxpayers use the remote channels that the tax authorities have available, namely in what relates to the Taxpayer Support Center, Taxpayers Portal, and also Yazikuda channel for matters related with customs matters. There is some limitations on the access to the tax offices, as well as custom office and delegation. So it's recommended that taxpayers only go to AGT services in case of extreme need. So for that purposes, they are ensuring minimum services to customers and are open only in the mornings. The tax officers also are dismissed from work posts and who fall into groups considered at risk continue to provide remote services either by email or by phone. So in what relates to external inspections, and similar to other countries, they are temporarily suspended. However, that does not mean that the tax authorities cannot request further information in the course of ongoing inspections. So in practical terms, I guess this summarizes the most relevant measures implemented from a tax perspective, and we will keep update those in case there are more measures that are implemented. So it's likely that associated to the COVID-19 pandemic and also with the situation of the oil prices, that the government would probably be revising the state budget and also make a few changes in some taxes, normally in what relates with the corporate income tax and employment income tax, which is likely to happen in the next months. So I think that's it for Angola. I'll probably hand over to my colleague from PwC Mozambique, Hamad Ezak.
Thanks, Christina. Hello, everyone. I am Ahmed Esak, Tax and Legal Partner based in Maputo, and will be covering the tax measures to address COVID-19 crisis in Mozambique. Mozambique is in a state of emergency since April 1, and we learned yesterday that the current status will remain at least until May 30. So far, the state of emergency is not reflective of a full lockdown, but the government is urging people to keep social distancing and stay at home where possible. As Kenny mentioned, this pandemic raises various challenges, particularly to developing countries such as Mozambique. Our economy was showing signs of recovery after some tough years, and is now facing prospects of a recession. In this context, and in order to somehow address the economic impact of COVID-19, the government approved and introduced various measures, including measures of tax nature. So what tax measures are these? Well, to start with, all deadlines related with judicial and administrative dispute resolution proceedings have been suspended for as long as the state of emergency will remain in force. Effectively, this means, for example, that if a taxpayer received a tax assessment notice on, say, March 15 and had 30 days to file its complaint or appeal, the clock stopped ticking on April 1. And will only continue to tick once the state of emergency is lifted. So if the state of emergency is lifted, say, by the end of May, the deadline to file the complaint or appeal will be around mid-June. Still within the tax controversy arena, the Mozambican tax authorities has also suspended all tax audits. So unlike other jurisdictions that we have seen where tax controversy is still ongoing, in Mozambique it has been suspended. In addition to these measures, and moving now to the amnesty space, the government introduced a regulation whereby fines and interest due as a result of lack of payment or delay in payment of social security contributions accrued before April 23 can be waived, provided such payments are regularized until July 23. Regarding measures to reduce visits to the tax office and thereby ensuring social distancing, besides having introduced the rotation system, the government suspended the issuing of tax registration numbers. This means that new businesses that are yet to obtain a tax registration number, what we call a NUIT, may not be able to do so, and consequently may not be able to start their operations. Regarding measures to help businesses from a cash flow perspective, the government introduced yesterday 3 measures. The first being the possibility of importing and clearing essential goods and paying custom duties and VAT on a deferred basis, so within 90 days from clearance. Next slide, please. Okay. So, and the second measure is related with advance income tax payments. The government waived the obligation to make advance payments that would be due now in May, July, and September of this year, but with respect to the 2021 financial year. And also deferred the special advance payments that would be due in June, August, and October 2020 to January, February, and March 2021 respectively. But please don't get too excited about this measure related with advance payments, as they are only applicable to businesses that had a turnover of less than, say in dollar terms, $40,000 in 2019 financial year. One would expect that this measure should be extended to all taxpayers, as COVID-19 does not differentiate between small, medium, or large enterprises, but it is also true that if the government were to do so, it would strangle itself, as it is already running a budget on a huge deficit. It is also not clear how this measure will be applicable to those taxpayers that have a different tax year. Finally, the third measure deals with the possibility of offsetting VAT credits with other taxes, such as income taxes. We understand that the taxpayers will need to go through a process first to recognize their VAT credits before being able to offset those against other taxes. We know that the government is working on additional regulations to operationalize this measure, which will be issued soon. So, to wrap up, the tax controversy, the amnesty, and the VAT offsetting measures seem to be quite positive, whilst the tax registration measure is, say, counterproductive, and the advance tax payments is insufficient from the taxpayer's perspective. And with this, that's it for Mozambique. Now let's hear it out from South Africa. William, over to you.
Thanks, Ahmed. William Eastwood. I'm a tax partner in the Cape Town office in South Africa, and I'll be speaking about the tax measures for South Africa and for Namibia. From a South African perspective, just to set the scene, I mean, South Africa has been in a very low growth situation for some time. Just had a ratings downgrade to junk status by the credit agencies. And on top of that, obviously, having to deal with COVID-19. So in that context, government has announced a 500 billion rand, which comes out to about $30 billion stimulus package, which is quite significant in a South African context, but obviously has required a real balancing act between stimulating and affordability, given where we are economically. And we're seeing that a little bit in the kind of meat of the measures that are coming through. So while there are a number of measures, there's not a huge amount for higher earning corporates, and the real support is aimed at the kind of lower income earners, and then obviously opening up the gates to allow critical supplies to come in, which we'll talk about now. There are obviously some non-tax issues included in that, including some regulations to prohibit unjustified price hikes, and also freeing up the banks from the Competition Act provisions to some extent to allow them to take a common approach to debt relief. But obviously we had to talk about the tax implications. And I think from probably a common theme, and I was listening to Ahmed and thinking that Mozambique and South Africa authorities must be talking to each other, because quite a similar approach. First of all, from a tax return filing perspective, there have been no delays or ability to delay the actual filings, but similar to other of the comments, there is a e-filing system that works fairly well in South Africa, although we are seeing taxpayers in some cases experience the obvious challenges of complying with those requirements remotely. Disputes carry on. Similar to some of the other countries, there is a delay in what's called the day's requirements to submit filings, so that gives some leeway. But we're finding that the SA revenue authorities, apart from obvious restrictions around field audits, are being just as active and issuing assessments and carrying on. So again, the challenge of dealing with those remotely exists. There's a big focus on extension of payments, and there's an ability for taxpayers with a turnover of under 100 million to defer proportion of pay-as-you-earn liabilities and corporate income tax payments. 100 million again is not a huge number. It's about $6 million turnover, but we are seeing the ability for larger businesses to apply in terms of existing mechanisms for deferments, and that's a big focus area within the South African tax community at the moment. From an overall corporate tax perspective, we're not seeing any specific measures other than the deferrals for payments. We're seeing a lot of movements and responses to COVID in terms of cash pooling and currency movements and potential termination of contracts, etc. But all we've seen so far is the potential pushing down the road of some restricting measures that were coming in terms of restricting interest expenses. There's some provisions for exemptions for certain donations to a solidarity fund. And then if we go to the next page, please, there are some measures which I spoke about. If we could go to the next slide. Thanks. There are some measures to support companies that are in distress and to support lower earners. From a VAT perspective, big focus on fast-tracking refunds and changing the filing period to allow quicker refunds. And there's an extension of time that's been granted for the provision of documentation to support zero rating on exports, given the difficulties in doing that remotely. And then, as indicated, there's a list of critical suppliers and a list of essential goods. Both of those qualify to obviously support their importation, qualify for exemption from import VAT, and the critical supplies qualifies for a rebate from import duty. Critical supplies being really focused on kind of immune boosters, disinfectants, medical supplies, those kind of things. And then on the next page, just to finish off with the SA measures, there is a deferral on payments of excise taxes on alcoholic beverages and tobacco products, both of which have been banned for sale in South Africa, much to most of South Africa's disappointment. So the deferral of those excise taxes is for 90 days in that context. And then there's a 3-month deferral for filing and first payment of carbon tax liabilities. We could move to the next slide. Namibia really doesn't have significant amendments. On the next slide, we will see that really just 2 points to mention. One is similar to South Africa. There's a real focus on accelerating VAT refunds. And there's also the introduction of a scheme, a tax-back loan scheme, which is not with the revenue authorities, but in fact with banks, in terms of which the banks commit to loan up to a 12th of a company's previous tax paid in previous years in qualifying circumstances. So to sum up on the next page, we've kept it quite simple, but the overarching themes really are that the tax deadlines are still in place, and there needs to be a real focus in meeting those. There's an equivalent focus on reduced and deferred tax payments, and that's where we're seeing a lot of activity. And then finally, there's a slew of incentives and restrictions, and we're seeing it change almost day by day. So there's a real challenge in staying abreast as somebody who's responsible for a tax function. With that, I hand over to my Algerian colleagues.
Hey, this is Kenny. One quick comment there, William. Thanks for that. I think we're having a South African only webcast next week, which will go on, I assume, into more detail on each of those items you talked about.
Okay, thank you, William. Thank you, Kenny. Hi, everyone. My name is Lazar Sabani, and I'm tax and legal partner leading the tax and legal service practice in Algeria. For this presentation, I will cover the North Africa region with my partner Karim Imam, who will develop the measures for Egypt, and I will cover the three countries, Algeria, Tunisia, and Morocco. So we shall start by the tax measures taken by Algeria. And like the other countries, I mean, in the context of the COVID-19 pandemic, the measures taken by Algeria are mainly concerning the postponement of the deadlines of the periodic tax and social security returns without any specific, let's say, tax exemption or subsidies which have been provided. So for the annual corporate income tax return, the deadline to file this return is extended to May 31st for the companies registered with the Large Companies Tax Directorate, called in Algeria DGE, and to June 30 for the companies out of the DGE's scope. The balance of liquidation for the corporate income tax is being 20 days subsequent to the filing of the corporate income tax return. So it makes 20 June for the companies under DGE and 20 July for the rest of the companies. For the transfer pricing documentation filing date in Algeria, it is aligned indeed with the corporate income tax return, which should be then this year, May 31st for companies under DGE and 30 June for the rest of the companies. Also, the postponement of the other periodic declaration has been decided, namely the monthly tax return, G50, for the months of February, March, and April, which were extended to May 20. Similarly, the quarterly tax returns, G50 TER, which is applicable for small-sized businesses under the deemed taxation regime called IFU, the filing deadline was extended to May 20. The first installment of corporate income tax and personal income tax has been also extended to June 20 instead of March 20. For individuals, the annual personal income tax declaration has been deferred to 30 June instead of 30 April. Now, from Social Security contribution perspectives, the declaration for the first quarter of 2020 are postponed by 30 days. So this makes it, applicable on 30 May instead of 30 April. While self-employment Social Security contributions are delayed by 90 days, which makes it, applicable on September 30, 2020. And finally, the tax authorities has used, the COVID-19 context to suspend two measures which were enacted by the Finance Law for 2020, namely the taxation of the unallocated profits, which were subjected to distribution tax 15% by the Finance Law for 2020, and the application of the VAT zero rate, which should replace the VAT exemption regime starting from April 2020. These two measures, have been postponed, and particularly the last measure, which is applicable to the hydrocarbon sector, which should benefit, from VAT exemption and should then go through the VAT exemption process, has to be, has been postponed, while this one, should have been entered into force by April 1st. So, for the hydrocarbon regime, however, there is no specific adaptative measures which have been taken. Indeed, the relief tax measures undertaken by the tax authorities in Algeria targeted mainly the businesses and individuals relevant to the common tax law. For the hydrocarbon sector, we recognized, however, that the additional income tax called, ICR, levied on the hydrocarbon income follows the same declaration and payment modalities of payment of the corporate income tax under the standard tax regime, which implies, as per my understanding and as per our exchanges with the tax administration, that the postponement of the corporate income tax declaration should be also applicable to the ECR. So this tax should be due by 31st of May 2020 instead of April 30. This, however, differs from the tax on foreign partners' remuneration, given that such tax is declared and paid by the national oil company Sonatrach on behalf of the foreign contractors, and the filing and payment deadline of the liquidation balance of this tax is still due to April 30, meaning today. So this position has been verbally confirmed to us by the tax administration. But this was a question asked by the hydrocarbon companies in Algeria. As for the other monthly taxes paid by the hydrocarbon companies, and in particular, the hydrocarbon royalties and the hydrocarbon taxes on the oil revenues, no specific postponement nor relief measure is envisaged so far by the Algerian tax authorities or the hydrocarbon authorities called Al-Naft, so the same deadlines should be applicable. Finally, for Algeria, a complementary finance law is expected to be published very soon, in the coming weeks maybe, or next couple of months, that will address maybe the current tax challenges that are, applicable in Algeria as part of the COVID-19 crisis, notably. We move now to the tax measures taken by Morocco regarding the COVID-19 crisis. For Morocco, and similarly to Algeria, deferral measures were taken. Indeed, tolerance measures were published by the Moroccan tax authorities, and which companies with a turnover not exceeding 20 million Moroccan dirhams are allowed to postpone the payment of taxes and reporting obligations until the end of June 2020. The deadline extension mentioned here is applicable for the corporate income tax obligations, namely the corporate income tax return for fiscal year 2019, the additional corporate income tax due for FY 2019, and also for the first installment due for the current year 2020. Nonetheless, for the companies which turnover exceeds or equal to 20 million Moroccan dirhams and suffering significant harm due to the drastic drop in their activity, they should formally request from the Ministry of Finance a deferred payment of tax, and the decision should be made by the ministry on a case-by-case basis. So these companies have to approach the ministry to seek maybe a relief on their tax obligations. From the other hand, the Economic Monitoring Committee, called in French CVE, Comité de Veille Économique, has suspended the payment of employment social security contributions until June 30 for small, medium-sized businesses, and also for independent professions facing financial difficulties. In addition to the Moroccan, the Moroccan tax authorities have suspended tax audits until June 30. From employment perspective and due to the lockdown, employees in temporary work stoppage registered under the National Social Security Fund and declared to this Social Security Fund called CNSS during February 2020 and working for companies facing difficulties can benefit from 1,000 Moroccan dirhams allowance in March, and this allowance is doubled for the months of April, May, and June. In addition, this allowance is paid in addition to family allowances and health coverage already provided. This committee, this Economic Monetary Committee, CVE, has also decided to exempt from individual income tax any additional compensation paid to employees which are affiliated to the National Social Security Fund by their employers, in the limit, however, of 50% only of the average net monthly salary. For the measures now adopted by the Moroccan government for COVID-19, they were confined largely, to the common law and ordinary taxes rather than hydrocarbon taxes. However, we can assume, based on the Moroccan hydrocarbon tax regime, that the corporate income tax deferral declaration should also may be applicable to hydrocarbon industry unless specifically instructed otherwise, by the authorities. For the other specific taxes, hydrocarbon taxes, no clarification was provided, which implies, as per our understanding, that no amendment in terms of deadline for the filing of hydrocarbon-specific taxes is introduced. I think that this is all for Morocco. Now moving to the third country presented today, which is Tunisia. Like Algeria and Morocco, the measures taken by Tunisia regarding the COVID-19 outbreak are several and are focused on the postponement of the tax declaration deadlines, but not only, indeed, because there are other measures which were taken by Tunisia, notably tax exemption and incentives for the healthcare and export sectors. But from tax perspective, the first measure is indeed the deferral of the tax declarations. So the deadline for filing of the corporate income tax return, which is due for the taxable profits of fiscal year 2019, is extended to May 31st, while it was by common law it was due by March 25. But this extension is applicable for all companies except those which are subject to corporate income tax at the rate of 35%. Deadlines of monthly tax returns filing have been extended as well, and the application of the late payment penalties for tax declaration of taxpayers that are not members of the system of e-filing and e-payment due during the period from March 23 to April 30 are also suspended until the end of April 2020. Other measures were taken relating notably to VAT reliefs for certain sectors. So the VAT rate due on the importation of products necessary for the supply, manufacture and sale of personal protection products and their inputs is reduced to 7%. Also, there is a health measure which has been taken by exempting individual protection products from VAT, customs duties, and corporate income tax. Another VAT exemption is applicable on sales of pharmaceuticals by retailers and the wholesalers. In addition to this, inputs for the manufacture of individual protection products are exempt from customs duties and any other taxes and duties due on importation. The quantities, however, of such inputs shall be approved by the ministry in charge of the industry before applying an exemption. On top of this, some other measures were enacted relating to the suspension, notably of the tax audits and the late payment penalties. Indeed, Tunisia has also covered the aspects of tax audits through its measures. As a result, all tax audits and all procedures linked to the tax audits shall be suspended during the period from March 23 until the end of May 2020. This also concerns the application of the late payment penalties, which are suspended for the period from April 1st to June 30. The incremental of the late payment penalties on the established debt are also suspended till the 15th day after the lockdown measures are lifted. Are also rescheduled, tax debts which are due for a period which could reach 7 years. This measure has been envisaged as well by the tax authorities to ease the process of the payment of the tax debts. Various other measures were taken by Tunisia, notably amnesty, of custom duties for certain industrial companies subject to certain conditions, the simplification of refund procedures related to VAT credit derived from the operations linked notably to the COVID-19 crisis, granting of certificates of suspension of VAT, as well as tax certificates with less formalities. And all the companies are authorized to reevaluate their buildings and lands recorded in their balance sheets based on the fair market value, and the capital gain resulting from this revaluation is exempt from income tax, provided that the revaluated assets are not sold. On top of these measures, there are other measures which were taken, such as the authorization of totally exporting companies operating in the agro industry and the healthcare industry to sell 100% of their products or services on the local market during the fiscal year 2020. Finally, in order to finance partly the COVID-19 measures, the Tunisian government has established a temporary and exceptional contribution that corresponds to 1 day wage, salary, or pension, which should be withheld in the payslip of April 2020. I think that I covered all the aspects for the 3 countries, and I hand over now to my colleague Karim Imam to develop the measures relating to Egypt. Karim.
Thank you, Lazar. Hi, everyone. This is Karim Imam from Egypt. I'm an international tax partner based in Egypt, and also I'm part of the Middle East regional team for the energy, utility, and mining. And I will be happy to share with you some of the measures that Egypt's government have taken for the COVID-19. And in Egypt, well, I think that the government started, like, they have committed themselves at the beginning of the COVID-19, they are dedicated something like $6.5 billion to support the COVID-19 impact to the economy. They have increased this budget to 1.5 million more, so in total $8 billion to support the economy and all the sectors that might be impacted for the COVID-19. When it comes to tax specifically, some of the measures that they have taken to the other countries that has been presented some extension to some of the tax returns for individuals and property tax, But for the corporate taxes specifically, they have allowed that the taxes that should be due by end of April, which is today, can be installed over like a 3 months period of like 20% and end of April, and 30 by end of May, and 50% by end of June, with no penalties, and there's no interest charges. This is definitely is part of the direction that the government have been taking, is that they are trying as much as they can that they keep cash with the business, so they can support the employment rates, and they can support the business to continue their operation without or as much as possible that they with less negative impact to their business and to the employees as well. So keeping the cash to run the business was the main objective of the government, and this is what they have taken. One of the impacts, of course, that has been impacted that out of the COVID-19 is that the stock exchange, we have a lot of activities coming from foreign investors. We have seen a drop of the foreign investments and a wave of selling most of the shares of the stock exchange at the start of the COVID-19. This, of course, had negative impact to the stock exchange. So very quickly, the government have taken some measures. Starts from that waiving capital gain for the listed shares for the foreign or non-resident, and they have also deferred or freeze the capital gain taxes for the resident Egyptians till end of 2021. And for the spot transactions, they have cancelled totally the transaction tax or the stamp duty. They have actually them on the foreign investors from 0.15% to 0.05, and for the nationals also from 0.15 till 0.125. I know that they need to make sure that support the stock exchange. And when it comes to the individuals, they are trying to keep as much cash as they have so they can support their own business. And also for the first time, that they had different withholding tax rates for dividends for the listed companies, and they cut the percentage by 50% from 10% of dividends to 5%, which is quite significant, and it's only for the listed shares. In regards to the oil and gas environment in general, so the deferral or the allowance of paying the corporate income tax over 3 months period was only granted for some industries. For the oil and gas specifically, it was not yet included. However, for the upstream business in Egypt, it's mainly the taxes is paid by the government on behalf of the investors. But it is expected that within the coming few hours that they will include the midstream business to be included within the industries, that they will enjoy the pay in installments for the corporate income tax during the coming period. Also, another measure that is mainly for the oil and gas sector, which is most of the midstream business, that they were suffering a lot of VAT refunds that's due with the government. So as part of the COVID-19 measures, the government has allowed that all the midstream business, they can refund like up to 65% of the amounts due to the tax authority immediately, subject that they issue a letter of guarantee with the same exact amount to the tax authority, and they can take this in cash on the spot. So this is like the measures that Egypt has taken, and among a lot of other measures that have been taken as well. But this is mainly what's related to taxes, and this is what's mainly meant to be for to support cash and to support the business to running the business. Thank you, and back to Kenny.
Kareem, thanks, and thanks to all the speakers. I thought we managed all this remotely fairly well, and the infrastructure held up pretty well. We've gotten a number of questions in. We have run a little bit longer than we had anticipated, so we won't get through all of these questions here on the webcast, but we will certainly respond to everyone. But let me jump into some of these questions that have come in. Let me go to Ghana first. There's a question on, is the penalty waiver in Ghana applicable to all debts, even from prior years? Rebecca?
Hi, Kenny.
Yes.
To my view, yes. And the reason is that the tax measure that was outlined by the minister last month in Parliament and what has been subsequently publicized by the GRA did not provide any specifics. And therefore, in practice, when you have that, debt is treated as debt. So my view would be yes, it would apply to all.
Okay. Obviously not proven yet, but as we gather more data, we can certainly reconfirm on that.
Yeah.
Let me move down to Mozambique. Ahmed, there's a question on, are the tax authorities still able to issue withholding tax exemption certificates during the period of the state of emergency?
Kenny, the answer is yes. Aside from the tax registration numbers, the tax authorities are issuing all other documents, including the tax clearance certificates. But it's important to say that you have to expect some kind of delays as they are not working at full steam.
Okay. Excellent. Thank you. Here's a question that actually applies, and this is an area we didn't talk much about, but could apply to any of the countries, but was specifically asked on 5 countries. Are there any withholding tax relief provisions by any of the African countries, specifically asking about e.g. Congo, Nigeria, Ghana, and Angola? And also, are there any other tax measures, facilities besides withholding tax relief to lower the cost of doing business in the countries above? That's a pretty loaded question, but Gilles, can we jump to you and Emmanuel to address the withholding tax relief in EG and Congo? Gilles, Emmanuel?
Yeah, Kenny, thank you.
Okay.
With regard to Congo, we have no tax relief for withholding tax, and it is the same for all indirect taxes. Deadlines remain unchanged. The only change regards direct taxes.
Okay. Gilles, are you still on? Yes.
And same answer for Equatorial Guinea. As far as I know, no specific provision has been introduced with regards to withholding tax, especially on payments made to non-residents.
Okay. Siri, what about Nigeria on this question on withholding tax or any other incentives to reduce the cost?
Well, in terms of withholding taxes, the only measures we've seen are the extension for remitting those amounts just by a few days over a week. In terms of reducing the cost, I think those measures have been rather subtle and not as direct as we would expect, and they've come in form of the extensions and possible waivers of penalties and interest for outstanding audits to the extent that you remit those before the 31st of May 2020. Aside from that, I'm not sure that the measures are far-reaching, and I think the impact will only be felt in very small measures. So we expect a bit more response from the tax authorities or the government in reducing cost of doing business for companies.
Okay. And Christina, same question on Angola. Any changes or relief as it relates to withholding tax?
No, no relief in what relates with withholding tax or the cost of doing a business in Angola in virtue of this of the measures that were applicable to Angola. So it's mainly related with the extension of deadlines and payments, namely related with Social Security and VAT only.
Okay.
Thank you.
Chijoki or Abraham, were there any questions in relation to North Africa? I didn't see, I don't know if there was any that came in towards the end. Abraham?
Yeah, none came in, Kenny.
Okay. All right. There are still a number of questions that we have not gotten to, but in the essence of time, what I'd like to do is shift to Chijoki, who's going to introduce another thought leadership piece that we were going to be releasing after this webinar. Chijoki? Chijoki, are you on? Okay, not sure if Chijoki's on. Let me jump back to another question real quick, and this is around voluntary disclosure or for finalizing tax audits. Are there any provisions in any of the countries around Africa, and feel free anybody to pipe in, around voluntary disclosure to resolve tax issues and abate penalties and interest?
Yes, we had one for Nigeria, which is really around payments for outstanding audits, so you get the waivers on the penalties and interest.
Okay. So we have it in Nigeria. Are there any timelines under which those need to be submitted?
Yes, the payment has to be made before the end of May to enjoy that waiver. So this is for audits which are still open. For audits, other audits that may be pending, those have been suspended going forward.
Okay. Any other countries that have any specific voluntary disclosure opportunities?
Kenny?
Yes.
As far as Mozambique is concerned, technically there is nothing of that sort. However, considering that the tax authorities are in need to generate revenues, I'm sure we can convince the authorities to be able to allow the clients to regularize their situation and at least apply the minimum fines as possible, or in certain cases even not to apply any fines at all.
And I would make the same comments for Francophone Africa. I mean, nothing in the law specific to COVID-19, but based on the discussion we had, looks like the tax authorities are open to discussion and finding a settlement agreement.
Hello, Kenny.
Yes.
Well, in the case of Ghana, 2 quick points. One, Parliament is it's been read in Parliament today. That we're going to amend our Revenue Administration Act to incorporate voluntary disclosure procedures. But in the interim period, as I did mention, anyone with debt that you voluntarily declare and settle by 30th June would have penalties waived. So there's a two-pronged approach in Ghana. One is a temporary bit, and the more permanent bit, which is what Parliament is looking at from today.
Okay. Thank you. Any other
from a South African?
Okay.
Sorry,
go ahead,
William. From a South African perspective, it's not COVID related specifically, but there's an ongoing voluntary disclosure program facility out there that, in terms of which a taxpayer can regularize their affairs and get away from most penalties, but not interest. The requirement is that the submission of the VDP must be made before the taxpayers under any audit or investigation.
Okay. All right. Those are all very, very helpful. Let me switch back to one other question, and this is to Kenya. You mentioned capital allowances overhaul. When is the effective date for the capital allowance overhaul in Kenya?
Thank you. I think the law was drafted in quite a lazy fashion, I must say. They just said it's effective from the year of income 2020. So it's effective almost immediately. But the difficulty we are having is that people don't account for taxes. Like, for instance, the law was passed last week. Some people have already filed their tax returns for 2020, January, February, March, and April. So it's difficult to understand when it will become effective. But it is there in law. So the simple and straight answer is from 2020, the capital allowances going forward be as per the tax law that was passed.
Okay. Thanks, Osborne. All right. I think, Chijoki, I think we've resolved our audio issue. I think, Chijoki, we can switch over to you to talk about the new release.
Yeah. Hi, Kenny. Thanks for that. I had a bit of an audio issue here. So just, can you hear me okay now?
Yes, we can hear you.
Okay, good. So, good afternoon, good evening, everybody. Essentially, what I'll be doing is to present to you our Africa Energy and Utilities Tax Guide for 2019. Now, you'd wonder why would we be putting a tax guide for 2019 and 2020, but we have done it that way because it covers all the developments for the entire 2019 in the oil and gas and energy and utilities space. And also, we've also incorporated the changes brought about by the finance laws for most countries, which typically would be between January to March of the subsequent year. So this contains all the changes for 2019 and the changes from the finance laws that were brought in in early 2020. Essentially, we've covered 25 of the main oil and gas producing countries across the continent. And we've also tried to do something that would help anybody looking at this guide. So we're looking at things along the areas of the fiscal regime of the countries. We're looking at the regulatory framework of the countries as well, just to give you a sense of the different regulatory frameworks across the continent. Forms of contracts, because essentially these are the kind of questions that we typically get from our clients to say, I'm looking to invest in a certain country. What are the forms of the contract in that country? What is the tax regime like? What are the key regulators as well? Who do I need to engage with? So this guide essentially provides you with, basic information that would help you get a bit more knowledge about these countries as well. And in the past 2 years, what we've also done is to include power and utilities, because we found out that there's not enough information out there around power and utilities as well. So even though you've had a lot of stuff around oil and gas, but not a lot of information on power and utilities. So you also have information on power and utilities for these countries across the region. And we are going to be sharing it with everybody who has indicated interest on when they were registering. So if you haven't indicated interest yet, please let us know through the link that was sent to you earlier, or you can email any one of us saying that you are interested if you hadn't indicated interest in the document. We'll also be putting it on our websites, which are open to everybody. So feel free to consult the document. And if you have any questions, we have all the country contacts, all the PwC country contacts in the document as well. And you can contact them, ask them questions, and take the conversations further. So thank you very much for your time, and I'll hand back to Kenny. Kenny, are you there?
Yeah, technical difficulty with the mute button. Thanks for that, Chijoki. I think this document will be very helpful to understand a lot of the regimes for oil and gas across Africa, particularly all the changes that took place, and if you're looking at a new entry. I would say the COVID-19 document will be sort of an add-on to that. It's a separate document, but we'll keep track of all of the COVID-19 changes across Africa. So I know we're getting down to the end of the 2 hours, but let me thank all the panelists. I will say it's a bit of a challenge when you try to do these remotely with this many panelists, and I think for the most part our technology worked fairly well. We will continue to track COVID-19 updates, and the global document will continue to be updated. And obviously, depending on how long this pandemic lasts in various countries, I'm sure we will see additional provisions. So obviously, we're all facing new and unprecedented challenges with the combination of this reduction in commodity prices and COVID-19. Even though we're all working remotely, we're still here to help you guys in any way that we can. I know it's challenging in many of these jurisdictions, particularly the more remote jurisdictions. As I mentioned earlier, PwC has created a COVID-19 Global Tax Repository for information. It covers not only Africa, it covers many and most countries around the world, and it's being updated effectively daily. We will send a link to that. We also have a couple of other resources on our global website, which we can add a link to when we follow up, such as the COVID-19 Navigator, which helps you and your company kind of navigate through the challenges that you're seeing. And we also have a thought leadership piece that we're doing every other week called the COVID-19 CFO Survey, which is being run. It's a survey that goes out to a number of CFOs to kind of get their latest thoughts on the impacts of COVID-19, and that is updated every other week. We will be sharing all of those documents with you, along with the guide that Chijoki just mentioned. Just one reminder, we have recorded the webinar, and you will receive that link as well. And just to end, again, thanks to all of the participants, thanks to all of the panelists. Do not hesitate to reach out to any of the members that were on this panel. If you have further questions, don't hesitate to reach out to me. All the questions that we did not get a chance to answer directly, we will respond in writing to all of those. So thanks again to everyone. Stay healthy, stay safe, and we look forward to talking to you again soon. Thank you.